So, the one tip that will save you. No, you're probably sat there thinking, what is this guy possibly going to teach me now that's going to save me? And in all honesty, when looking back at this lesson, it's definitely something that's very, very fundamental to our trading. But I do feel like a lot of us, and even myself at times, just skip over it. Not really thinking how important it actually is in terms of all of our entries, in terms of where we can actually take profits, everything like that. So definitely, guys, take lessons with all of this as we go through all of it. I'm going to be getting into the live charts as well. But yeah, that's going to be it. So as I've always said on this channel, I'm always going to be bringing out as much value as I can to you guys. And what I thought is because this one, pretty much this lesson it's not something that's talked about way too often. And I really did feel like a lot of you would benefit from it. In all honesty, it's pretty much one of the lessons from the elite strategy course that, I've got in the Diamant Capital Academy. So yeah, a few words about that at the end. But yeah, we're going to get straight into the lesson. So if you are interested, all links in the description, anything like that. Let's get straight into it, guys. So the first thing that we're going to talk about. So essentially what this is pretty much how the market moves between certain zones. Now, when I talk about these certain zones, first thing we have to do is actually identify what these are. Now, in my opinion, the way I would kind of, through all my observations of the market, there's two kind of areas that you can look at. One of them is an area of consolidation, and another one is an area of fast price action. Now, in other words, these can also be named as, the consolidation could be the accumulation phase, could be the distribution phase. You got things like fast price action, also known as the imbalance. But we're going to get straight into it, and how it actually looks in the market as well. So in terms of the first area, areas of consolidation, typically it's slow price action. So price isn't moving, in a certain direction. It's just chilling there. And usually what we get is we get some kind of supply or demand zones that are created just before the breakout. And obviously we can use these to our advantage. In terms of the second area, we're talking about fast price action. So what does that usually look like? Generally, you would see a massive imbalance in the market. Other traders label this as a liquidity void. In all honesty, whatever you label it, it's all pretty much the same thing. As soon as you see that massive gap in the market where there's not an equal amount of buying and selling, it's pretty much very biased, where there's an incredible amount of selling or an incredible amount of buying. That's what we're going to be looking at. So how do we actually use these to our advantage? Now, I'm going to say this, you need to change your mindset on how the market actually moves. Now, what I want you to realize is that the market does not move in one direction all the time. If that was the case, we're just going to be entering buys all the time, and we're pretty much going to get a high, 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 low, high, 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 low all the time. Again, similar type of thing when we're in a downtrend as well. But one thing you need to understand, it moves in waves, right? It slows down at times, it gets exhausted, it expands, it pullbacks, all these types of things. So what we need to understand is how can we actually see when the market is going to move, and how can we use that to our advantage? Now, using this idea of how the market moves between certain areas, we must identify where it's most likely to move towards. Now, obviously, we can use this to our advantage to figure out whether it's worth actually getting into a certain position. Now, areas of imbalances, price, as I've said, will tend to expand pretty quickly into these areas. And then previous areas of supply and demand, price will tend to slow down at these areas as the market reacts to the order blocks there. This is pretty much the simple theory. As soon as you've got an imbalance to the left of the market, so obviously when you are on your charts and everything, and you're looking to the left and there's massive imbalance there, you can expect that price is going to move quickly. But when we've got areas of supply and demand to the left, we can expect some kind of reaction at these zones, or at least a slowdown. Now, how does this actually look in the live charts? So let's just observe this. So we're talking about the fast price action areas, or the imbalances, as I've called them. Typically, what we're going to see is when we've got these imbalances identified. So let's just say we were in this part of the chart right here, and we're pretty much looking, we got into buys. Where can we expect for price to move towards? These imbalance areas pretty much act like magnets. What happens when you put two magnets together from a certain distance? They're not, really moving. As soon as it starts to get a bit closer, boom, they accelerate. It's exactly the same type of thing here as well. As soon as we start moving towards these imbalances, price starts to accelerate further and further. And that's something that you see in the market time and time again. So before we get into the conclusion of it, how does it look like when we react to these supply and demand zones? Again, when we are getting to these areas, price is going to slow down. What happened? We got that expansion towards imbalance. After the imbalance was the supply and demand area, and that's where price started to slow down. As you can see, it started to accumulate a bit. Again, a further expansion to the upside. As soon as we got to the next supply and demand area, it slowed down. Again, now a reversal. These types of things are very, very important to understand because you can pretty much map out what price is going to do. This applies to the lower time frame, the higher time frame, all things like this. Now, how can we use this to our advantage? Obviously, we can know if it's actually worth taking profits at certain reversal areas. Just for simple sort of analysis of it, a reversal area we could say here is the supply and demand area. We can also know if it's worth actually getting into any extra positions. So this could also, be termed as the continuation trade as well, because you might be in some very, very nice buys. But, once you're optimistic that we are feeling this imbalance to the upside, you could say that, okay, price is pretty safe that it's going to be moving to the upside. And then in general, your understanding of the market will actually really improve. And I really do feel like you will develop that edge in the markets. Now, this is not going to be one of the typical lessons that I always go through. With other ones, we're actually looking in depth into order blocks, or we're looking in depth into other, smaller areas. But with this one, it's a general mapping of the market that we just need to understand. Now, we've talked through them little case studies right there, but we're actually going to get into the live charts and pretty much go through some examples. And I really want to show you how we could actually use it on the lower time frame as well. I know obviously we can look on a high time frame perspective on the 1 hour and the 4 hour, and it's very, very clear to see there. But it also applies to the lower time frame. So this is going to help pretty much every single trader watching this video. But yeah, before we get into that, obviously, guys, Diamant Capital Academy, pretty much got the full mentorship course, the full Discord there as well. Any information you need. I'm going to be sending this PDF out later on as well. It's pretty much all going to be on my website. So you guys have free access to this. Honestly, nothing's required. You can pretty much have my presentations, anything I show on YouTube over here. But yeah, a lot more in depth, a lot more active in there. So yeah, guys. Let's continue on to the live charts and just see how we can apply this all. Now, what I'm going to do, I'm just going to start from the high time frame first of all. So let's just look at USD JPY on the high time frame. Now, the main thing that I'm talking about here is, first of all, let's just identify these areas. So first things first, for me at least, it's a lot easier to identify all of these imbalances. So what I'd usually do, I'll just get the rectangle tool. You could obviously mark it whatever color you want to do, but let's just say for this, yeah, let's just make it that dark color. So generally, it's always going to be where price action is very, very aggressive in one direction. So for example, we've got some areas right there. As you can see, some areas right here. Some further areas. This one was very, very clean. Again, to the upside as well. We've got some lower time frame ones there. Again, that type of thing there as well. And this is one thing that I did want to show on here as well. Typically, what's going to happen is this. When you get, so let's just start drawing this up. When you get, for example, your consolidation phase or whatever, as soon as we break, let's start there again. It's a bit messy. As soon as we get a break outside of that area and price is very, very fast moving in a certain direction, if you have the bias that price is going to reverse and move to the upside, typically this is going to be reflected. So it's pretty much going to look like this. So let's just say, for example, on the higher time frame, we had reason to believe that there was a nice demand zone to buy up from. And then obviously we're looking for where can price move to next. And it's just going to be as simple as this. You always want to target the next supply and demand area. And before that, what's going to be there? Pretty much, you're always going to get this imbalance right there. So price is very, very fast moving there. It's very easy to close. And that's typically what we're going to get. Again, similar type of thing here, even on the lower time frame. For example, we had an aggressive move down, and now it's kind of reflected on the way up as well. Again, multiple times as well, to the downside here. As you can see, some imbalance right here. Again, reflected to the downside. So these types of things happen time and time again. And that's something that you should, definitely look out for. Sort of moving in to price right now, even as well. The most recent thing of what we've seen on USD JPY. Similar type of thing again and again. We always see this. Once we move to imbalances, price is going to be very fast moving. It's moved to the upside. Now, as you can see, what has price done? As soon as we got a clear break down below, price moved very, very aggressive in the same direction. So as you can see, it's kind of reflected in these areas. Now, what happens at the supply and demand zones? That's where price starts to slow down. So very, very easily here, explained, boom, that type of thing. So this type of thing, we see it time and time again. And honestly, once, it's something so fundamental, and you could tell this to a beginner and they'll understand it. But it's when you really, really understand it and how we could actually use it to our advantage, where it really, really helps. Because you can identify these areas as, for example, once we feel this imbalance, we now know that price is going to slow down. What does that mean? We start to take profits. At the same time as well, if we see a very, very nice break to the upside and then some nice confirmation entry, that's when we can potentially reverse our trade and actually look for the opposite end. So we close out our positions here, or for example, we take major profits, and then we pretty much look for buys in the opposite direction. Now, if somebody was to ask me, what can I expect price to do now? Now, using all of this analysis, let's just delete this, because obviously it's all well and good me teaching you this visually and sort of as a lesson, but how can we actually apply this? As you can see, what price has actually done, we're now, so on the higher time frames, just to give you a quick little explanation of this, we've broken structure, significant structure to the upside. So obviously I've talked about primary and secondary structure before. As you can see, we've broken structure to the upside. We've had a nice retracement down to a discounted demand zone. So this area right here, as you can see, price is now very, very nicely started to buy up. So let's just say, for example, you're even entering on a limit at this area right here. How would I use this to my advantage? First of all, I would look, where can we fill the imbalance first of all? So that would be this area right here. So again, I'm expecting for price to fill this area. So that would be a what? A very nice 1 to 5. The next area that you can target, for example, that area up there. Again, it's that similar type of thing where with this, we can now map out our take profit zones. Again, where would I consider the next zone right here? It would be the next imbalance area that I do expect to get filled. So if I'm extending that take profit, obviously we can now look for a 1 to 10. Now, another note that I do want to give here as well. When we are looking for these trades as well, obviously we need to understand that at any point, you could give the very clear argument that, look, we've mitigated off this area right here. And now if we replayed any of this, personally, obviously I could see this as a complex pullback, but I could still expect some kind of reaction from this zone. So for me personally, I would take some type of take profit there and even consider getting into some sells at that time. But if I see that any of these supply and demand areas are respected in terms of buys, then obviously I'm still going to be extending my take profits to the upside. So typically this is what I would expect. If not a reaction from here, a reaction from there. If we get a nice reaction from this demand zone, then that's when I can expect for price to continue and to fill this imbalance right here. So guys, I hope this really has made sense. Obviously, like I said in the beginning of this lesson, this was pretty much taken from the elite strategy part of the course. I really do feel like, I don't just want to gatekeep this. In theory, it's very, very simple. And, you might be sat here thinking, you've just told me something that's so obvious. But really and truly, it's even taken me, for example, a while to actually realize this in the markets. Why is it, for example, that price speeds up in certain areas? Why is it that it slows down in certain areas? This is the type of thing that you need to understand. So yeah, guys, if you ever want to get into more depth and, really look at the quality of the course, and obviously there's a lot of focus on fundamentals. Obviously I do send out my fundamental reports weekly and everything like that. All my analysis and everything, you can just have a quick little look here. If you guys want access, pretty much it's going to be the first link in the description. So yeah, guys, apart from that, that's going to be it from me. Take care, and I'll see you all in the next video.